Coming up tonight, Ghana's Treasury bill rates drop below 20% for the first time in 2 years. This shift marks a major turning point in government borrowing costs and has far-reaching implications for investors, businesses, and the broader economy. What does this mean for liquidity, inflation, and interest rates in the banking sector? Stay with us as we break it all down with expert insights and analysis. Also ahead, a pre-budget survey by KPMG has revealed that Ghana risks losing at least 6.4 billion cedis in revenue if the government abolishes the e-levy and COVID-19 levy in the 2025 budget. Must Finance Minister press on to meet the expectations, or what must give? We will explore all these and more shortly. So we have details of these and many other stories coming up shortly. Stay with us. Significant development. Ghana's Treasury bill rates have fallen below 20% for the first time in nearly 2 years. This decline reflects a shift in the government's borrowing strategy and growing investor confidence in the country's economic recovery. Now, the following three Business News Desk report puts the spotlight on this particular conversation and brings us more. Well, we'll bring you that shortly, but also in the bulletin, we'll be bringing you updates from the KPMG report, highlighting some key issues that have come up with the ahead of the budget presentation. Also, we're bringing you expectations of various stakeholders ahead of the budget presentation tomorrow. But let's now delve into the issues of the T-bills market, and this report brings you details.
According to the latest auction results from the Bank of Ghana, the 91-day T-bill rate dropped sharply to 17.72%, while the 182-day bill fell to 18.97%, and the 364-day bill declined to 19.98%. These rates represent a significant decrease from the previous week's rates of 20.79% for the 91-day bill, 22.99% for the 182-day, and 22.69% for the 364-day bills. The decline in T-bill rates suggests a reduced reliance on short-term domestic borrowing as the government moves towards fiscal consolidation and explores alternative funding sources. In January 2025, the government raised 38.45 billion cedis through T-bills, slightly below the 40.57 billion cedis offered by investors. Despite high demand, authorities have been rejecting bids aggressively to push yields lower, aligning with the goal of reducing borrowing costs. The latest auction results also show a decrease in total bids accepted from 7.41 billion cedis on February 28 to 6.22 billion on March 7. The continuing decline in T-bill rates signals growing investor confidence in the country's fiscal management. This development is expected to have a positive impact on the economy, including lower cost of borrowing, reduced debt servicing burden, and private sector growth. However, analysts caution that sustained economic stability and inflation control will be critical to ensuring long-term gains.
So those were updates basically on the T-bills market and how the market has fared recently as government went to the market to raise some funds. And you see over there that the rate has dropped significantly. We'll be speaking to industry and finance experts to pick their thoughts on how all of this translates or impacts on the economy and basically what the way forward is really, especially in the case where we've had concerns by the governor of the Bank of Ghana that despite the fact that this has some positive impacts, there's also a downside to it where it could have impacts on the depreciation of the local currency. But we've been joined via Zoom by financial economist Dr. Eric Boache Yadom with the University of Professional Studies. And also we'll have on phone lines Greater Accra Chairman of the Association of Ghana Industries, AGI, Chonam Akpelo. So we'll be bringing you live interviews with them as they join us. Thank you so much for your time, gentlemen. Dr. Boache Yadom. All right.
Yes, I can hear you. Can you hear me?
Great. Doc, thank you so much for your time. Some very interesting updates there from the T-bills market. Maybe your initial thoughts, what really is happening?
Yes, basically, it has two sides that I'm sure we'll talk about it in details. But just confirming to the basic finance literature that says the higher the risks, the higher the returns. And basically means also that the risk that we face as a country in terms of default is falling and investors' confidence are going up. So they are demanding a lower interest, or the government is offering lower interest, and they are still subscribing. So it's pointing out to the general recovery that the Ghanaian economy is experiencing. And it's good news. And we'll also talk about the bad news as well.
Okay. So the other side of this decline in T-bill rates is the fact that it also means that interest rates on loans will begin to see some decline. Please explain the dynamics to us.
Okay, so first of all, let's talk about the possible causes, and then we'll come to the implications as you have rightly asked. Now, what can cause the exchange rate to fall? We can look at direct government involvement in terms of lowering interest rate on the Treasury bills in order to make it less attractive to investors. But in spite of all this, investors keep coming, and they are oversubscribing. So what we are expecting, what is happening now currently is that it appears that investors don't have a lot of alternatives for their funds. So they have to keep coming back to the government. And also it signals to the general economic environment which is recovering. For example, the provisional GDP growth for 2024 in a region of about 5.7% growth, and we have 8.9 million general reserves. Then we also have expected debt to GDP, which is around about 65% or less. I mean, so generally the economy is becoming better, and investors' confidence keep going up, and the transmission mechanism, the ministry or government is expecting that when these rejected funds, when the fall in the Treasury bill rate will cause funds to be moved to businesses. How would it happen? You see, when these funds are rejected, the financial institution, through the mechanism in which funds they borrow from the government, will end up giving it back to businesses. Hello, can you hear me?
Yes, I understand perfectly. I was hoping to also understand, really, does this always translate to businesses willing to, banks willing to lend to businesses? Because the issues that pertain to the loan defaults and the rest are still pertinent. So really, does this always automatically mean that banks would begin to now look to give money to private businesses?
So that is the general expectation, that if there's no avenue, if there's no way that the funds can be invested, then it should go back. You know, the funds will go back to the public in terms of lending from these banks to the business community. That is why the president said in the State of the Nation address that not playing much in the domestic financial market will lessen the crowding out of funds and funds will go back. But you see, there is a leaking point within our system. The leaking point is that you cannot force investors to give their funds to the business communities. They can tend to invest in foreign currency. That is why I think the BOG governor is saying that it can worsen the exchange rate volatility. So if I'm an investor, I have the option of probably investing in a bank fixed deposit, and the bank in turn will lend it to the business community. But you cannot force me to buy a fixed deposit or give it to any other financial asset. So the most lucrative probably could be investing in this exchange rate, which will come back to hurt us. So I think that the free fall in the Treasury bill rate, if it does not really reflect the market sentiment and is in a way to achieve a certain government objective, you can't force the other end. You have no control over what investors will do with their funds. So generally, it will have effect on the exchange rate, which I agree with the Governor of Bank of Ghana. So we should not make the free fall too fast and too speed. And we should not make too quick in terms of the fall of the Treasury bill rate. It should be gradual, so that it will reflect the general sentiment in the market. So we can have this fall and it still not reflect funds being made cheaply available to investors.
Interesting one there, Doc. We know that on the other hand, this is also government trying to find a cheap alternative to raising the needed revenue aside from the T-bills. We know this would also mean the bonds market will get some. The bonds market, of course, is a cheaper alternative. But really, from where you sit, do you see this inspiring confidence in the bonds market anytime soon?
Not exactly. Not exactly. You see, government borrowing at a cheaper cost, and I heard the Minister of Finance saying that by the drop in the Treasury bill rate, they have saved about $1 million cedis or so. Sorry, $1 billion cedis in terms of the government borrowing. Not exactly. You are trading two sides of the coin. So it is a trade-off. If it all goes as the government is gambling, then it is expected funds will go back into long-term investment, as in bonds or something. But remember that we have some debt obligation that the government is expected to pay in August. So if we're unable to raise, if the Treasury bill rate is attractive enough and you don't raise sufficient funds, it will affect your ability to meet these maturing responsibilities or coupon on your debt. And it may also come back in the form of exchange rate risk that I have mentioned earlier. So the government must tread cautiously. We need money, in August and subsequent months to be able to repay coupons and things. So if we reduce the exchange rate so drastically, the time that you may need the funds or you may need investors to subscribe, it may be too late. So you should be cautious in terms of manipulating or playing with the interest rate the Treasury bill rate.
Yeah, so I'll come back to you shortly, because you see, on one hand, we are seeing the government talk about scrapping some taxes. It's the amount of bids it's accepting on the T-bill market quite smaller than it used to. It's dropping interest rates. Isn't the government moving a bit too quickly, especially on the revenue side, because it's very stringent policies it's implementing right now, the line at which it's going? The question really is, how is it going to sustain its operations or raise the money to keep the country or the economy running if it's making these much cuts and we are not seeing clearly where it's planning to raise revenue?
Well, I think I've said it on your platform time and again that how government should raise revenue, the model is clear. And if we see governance as continuous, I think they should continue from where we left off last year. Last year, we were able to raise a historical domestic tax revenue of about 153.4 billion Ghana cedis. Even if we're able to raise about 200 billion Ghana cedis this year, it will help the government to be able to undertake most of the developmental projects. So the domestic tax mobilization, I'm expecting that government should put in measures to ensure compliance and should broaden the base. We talk about broadening the base. If we are scrapping off e-levy, you are scrapping off COVID-19 and betting taxes, which together may sum up to around 4 billion Ghana cedis. It's not so much. It doesn't take so much from the existing revenue mobilization scheme that we have. I think the key is how government can leverage on technology to be able to identify those that are not paying direct taxes, those that are earning free money, like the informal sector, find a way to formalize their activities, make sure you can track their income, And I think that the Ghana card linked being our what we call it, the TIN number is a gateway towards identifying revenue, identifying ways that people who are not paying taxes can be robbing. For example, if the mason comes to work in your house, instead of paying the person by cash, if there's incentive in paying by mobile money or any digital platform, many people will choose to pay the informal artisans, market women, will choose to pay them by these electronic means. And by paying them through these electronic means, you will be able to track how much revenue, how much money is going through these mobile money or these electronic platforms, and they will pay a reasonable tax.
Okay.
We also know that a large number of these businesses, informal sector, what is on their mobile money or their electronic platform is usually their capital. So we have to know that if at the beginning of the period, let's say the month, you have about 100 cities on your mobile money wallet.
Okay.
And at the end, it has gone to 150 million. It seems that the value has appreciated and you will be asked to pay a reasonable amount of money. So the thin line is how the government can encourage and incentivize people to use electronic means so that revenues can be identified and they'll pay a reasonable tax.
I think it's a good thing then that we are hearing that government intends to implement, to use technology to implement, for instance, the road tolls that it just spoke about. But I have also on the phone, Chonam Akpelu, Greater Accra Chairman of AGI. Chonam, thank you so much for your time. I'm sure you are happy. Anything that would inspire confidence in the economy is good news for you. And of course, the idea of getting some more capital for industry with this whole T-bills conversation is welcoming news for you.
Yes, it is. Thank you for having good evening and good evening to your cherished listeners. So we'll be following the whole tax space for some time, and we think that a reduction in the petty bills, and also it is certainly a good thing for industry, because you recall that in the past couple of years, because of the government's haircut program and so on, there has been significant reduction in confidence in investing in our economy. So a lot more people hold back cash, and so it appears that the confidence is coming back, and government is, hopefully reducing the rate. The good thing for us in industry is that as government reduce the treasury bill, then it means that there will be a lot of discontinuation in investing in treasury bill, especially from the institutional investors, and also most of the banks who would rather invest their money in treasury bills. Hopefully, they will now keep their money because the rate is no longer as high as it used to be. What it means is that there will be a lot of loanable funds available for industry to tap in, and that's really where we're coming. And so we hope that it would actually translate into a lot more loanable funds available for us to expand industry. And all of this talk about 24-hour economy and so on can only be powered by private sector and investment in the private sector. So we've also taken notice of the inflation rate, and it appears that the inflation rate is higher than the Treasury bill returns, and that's really good. So it will mean that you rather not invest in Treasury bill, which is good for industry. So yes, overall, we look forward to a much more prosperous future for industry.
I'm sure alongside this is the issue of interest rates, and I'm sure you'll be expecting it to decline anytime soon, especially with the next Monetary Policy Committee announcement, right?
Yes. So the last time we engaged the Bank of Ghana governor at the Economic Forum, he did indicate about his determination to ensure that the policy rate will go down significantly. And so we are really looking forward to it, and hopefully once the policy rate goes down, it would affect the interest rate, and then we will have a cheaper rate of borrowing in the country, which has been, as you know, have been one of our biggest headache, the rate of borrowing.
Okay. Shona, finally, before you leave us, budget presentation tomorrow. For you as AGI, briefly tell us, what are your key expectations?
Well, so for us, we are keen to see the different steps government will be taking to either take off some of the taxes entirely and or reduce some of the tax rates. For example, we'd like to see COVID levy, right? We'd like to see COVID levy off the bill, even though it's 1%, but it's really high. You're dealing high volumes. Then the e-levy that has been extremely topical over the past couple of years. We're looking forward to having it taken off, and many other nuisance taxes that we have to deal with on daily basis. So our hope is that they will be taken off all of these taxes. But we also came to see how the support that will be going to agriculture, knowing that agriculture remains a bigger component of our raw material source. So we'd like to see the support going to agriculture vis-a-vis how that will translate into industry. We are looking at the supply chain and the different and how they are going to put in systems to allow industry to have easy access to raw materials from the agri sector. And we are also interested to see how the budget will be used as a mechanism to promote local industrialization as well.
Sure thing. I'm sure, of course, the issue of rationalization of the VAT will be also on your list. But thank you so much, Chona Makpelo. He's the Greater Accra Chairman of the Association of Ghana Industries. Earlier, too, we're joined by Dr. Boakye Yadom, a financial economist with the University of Professional Studies. Give us some good perspectives on this whole conversation with T-bill rates dropping. This is Business Focus here on TV3. We'll go for a quick break. When we come back, we'll delve into the issues regarding expectations of tomorrow's budget, and we're bringing you highlights of a survey conducted by KPMG auditing firm on expectations of this budget. Stay tuned. Is slated for elimination to fund the free SHS program. Here also emphasized the importance of government sealing fiscal leakages and eliminating wastage to stimulate economic growth.
Well, over the years, Ghana as a country, we have been fiscally indisciplined. It means that we have not been able to mobilize enough revenue to finance our expenditure. It is also interesting to note that in as much as we are saying we want to reduce leakages in revenue, there is also wastage in expenditure. And so you look at it from the upper end and also the lower end. So we expect the government to be fiscally disciplined. In fact, the president has demonstrated that by nominating about 60 ministers from the over 125 ministries that we witnessed under the former administration. And so we expect that government will be committed to the fiscal, the government will be committed in terms of its fiscal discipline by significantly reducing expenditure. And under the fiscal stability, one of the issues that I want to, comment on has to do with our borrowing appetite. In fact, once you are not able to raise revenue domestically, it means that you have to resort to other methods of raising revenue. And so we have to go to the capital market. And we can either go to the domestic capital market or the international capital market. But from the trends that we are seeing so far, government quest or appetite for borrowing has significantly reduced. And that has also translated into the reduction in the rate for the Treasury bill across all maturities. We expect government to be disciplined with regards to the rate and the quantum of their borrowing, so that in terms of fiscal discipline, we can reduce the budget deficit. I also want to encourage the government to look for a sustainable means of financing the free SHS. Currently, as it stands now, free SHS is having a serious toll on our annual budget. And so, personally, if you ask my personal opinion, I will be of the view that instead of the government cancelling the COVID levy, they should rather rename or change the COVID levy into free SHS levy. In that case, we are already paying it. In that case, we'll have a sustainable means of what? Financing the free SHS. And so once we convert the COVID levy into a free SHS levy, a special collection account will be open at the Ministry of Education that will be receiving this money from the Ghana Revenue Authority and then for onward disbursement to the schools. I equally want to encourage the government to open a special collection account where people can voluntarily contribute towards the running of the free SHS. If we are not able to do this, we will be depending on the consolidated fund for the financing of the free SHS. So I am of the opinion that instead of cancelling the e-levy, the COVID levy, the betting levy, and the emission levy, one of them should be retained. And the retention must be made clear to Ghanaians that they are going to use it as a sustainable means of financing the free SHS. And as part of the fiscal discipline of the government, we also expect the government not to start any new projects. For instance, the e-blocks that are dotted and scattered across the country, we expect the government to finish all those projects and hand them over to the communities for their usage. We were also happy when we heard the president saying that all the Agenda 111 hospitals will also be completed. So for us as industry players, we believe that government should be restrictive as far as its expenditure is concerned, and all the capital projects that have been started under the previous administration, not only under another administration, but all the previous administration, government should relook at them, complete them, and hand over those projects to the various communities for their usage.
So here there's some expectations ahead of the budget presentation, but I'll turn our attention now to the KPMG survey ahead of the budget presentation, where they sampled the views of a cross-section of Ghanaians on what they expect to reflect in this budget. We have Kwame Sapombanie. He is the head of advisory at KPMG, to throw more light on this particular finding. Thank you so much for your time, and apologies for keeping you on. We know you've been on for a while, but then just walk us through the findings of your budget. Some interesting points there. 80% of respondents expressed confidence that this new government's policies in the 2025 budget will drive economic recovery. Very interesting figures there, don't you think?
Yes. Good evening. Yes. Very, very positive and interesting figures, as you say. So good for us.
So what's driving this confidence, really?
So the confidence is primarily from expectations that there'll be some tax cuts, but more importantly, an effective implementation of the 24-hour economy. I think it's something that the businesses are looking forward to in terms of government infrastructure to support effective implementation to drive growth.
Okay, so Just help us understand the dynamics of this survey. What went into it? How many people did you speak to? Who make up your correspondents?
So we do this annually with UNDP. And so, and this time around, we did some face-to-face interviews and also used technology to get to a widespread of respondents. We interviewed about 240 entities or respondents across 10 sectors. And the goal was to really get an understanding of how businesses are being impacted today and how they expect the budget to influence what they do in a positive manner. So basically, it was just, what are you doing today and how is the economy impacting you and what do you expect from the budget? And that's what we did.
Interesting. So now, while 72% of respondents believe the 24-hour economy policy will create jobs, they also emphasize the need for better infrastructure, security, and incentives. Now, in your view, what are the biggest challenges Ghana must address to make this policy successful?
I mean, some of the basic ones, I mean, look at, for instance, electricity. It has to be available constantly to ensure that this 24-hour economy is there, and also it has to be at the right price. We need technology to be able to leverage things that can be done electronically to ensure that there's a constant flow of information to support a 24-hour economy.
Interesting. Now, many respondents supported also the abolishing of the e-levy and COVID-19 levy, but they acknowledged the resulting revenue shortfall. So what alternatives would you recommend in this case to help government make up for this revenue shortfalls? What viable options would you suggest?
So I think from the respondents, I mean, it was clear that they need efficient mobilization of taxes. And they wanted some leveraging of technology to expand the tax base in the informal sector. Also, I think is more prudent expenditure management was one that they felt that if savings could be made, it would really help manage the shortfall. And I think one area that the respondents really looked at was how to, get some leverage from property taxes, for instance, which through, again, use of data and leveraging some of these AIs to really capture the different properties that are around some very important areas that I think we can tax to make up the shortfall.
I don't know if your survey touched on it, but did you get the sense that your respondents were open to pay more taxes, for instance, to make up for the revenue shortfall?
So not particularly in terms of that, but I think basically, I mean, an average person will pay more taxes if they feel that the taxes are being used prudently. Also, again, I keep mentioning technology. If you use technology, it's easier to bring more people within the tax net, right? And something that I think we've done really well is our Ghana card and our TIN numbers. I think it is it's high time that we really leverage it to ensure that we capture people through the informal sector, especially. I think there's a lot of business done in the markets. I mean, how do we ensure that everybody is contributing to the tax net?
Interesting one there. Now, on the issue of SOEs, you know, they've been in the news for a while now, especially after the finance minister revealed that a lot of them were running at a loss. I'm sure that also came, I noticed that also came up in your survey. So what in your opinion should be done to should be prioritized to ensure reform, especially amongst these SOEs?
So I think it's a lot about governance, right? Making sure that we put the right people in charge of the different SOEs and making sure that there's accountability, especially around what strategy they are deploying and how are we adequately monitoring that strategy against what? Who's checking what? Do we have the right board members sitting at the different SOEs? Are they tracking critical matrices? And are they reporting? I think a key point that was brought out is spent. How are we ensuring value for money across a lot of the activities through these SOEs?
Interesting one there. But also, I know in your earlier submission, you mentioned the role of technology and leveraging on it to improve the tax situation in the country. But what specific digital reforms or enforcement strategies do you think the government should implement to improve the tax collection process in the country?
So I believe some of it is already there. This e-invoicing and having payments directly connecting to the tax authorities, I think we need to expand that, right? Because if you already get the reports on that automatically when the transaction happens, it's very difficult to now hide away from paying the tax. So I think we need to expand the things such as e-invoicing and also really being able to get to where the value chain is, right? And I think it will improve our tax base.
All right, thank you so much for your time. But any final words? And I understand you had some partnership with one of the development partners in this report. Maybe you could shed some light on that.
Yes, UNDP has been our partner over the years. We do this annually. And as you've alluded to, there's a lot of positive expectations from this budget to revamp the economy. So we all look forward to this budget tomorrow and to make sure that it sees us through some significant growth in the economy.
Thank you so much. That was Kwame Sapong Bani, head of advisory at KPMG Ghana. Thank you so much for your time. It's been great talking to you. So basically, those are highlights from the KPMG report. Some interesting details coming out there. Revenue losses, of course, if we had to scrap some of the taxes, as high as 6.4 billion Ghana cedis. But we'll see how all of that pans out, especially tomorrow when the Finance Minister, Dr. Kassia Latufosing, begins or presents finally the budget to help us understand what government's plan is to make up for those revenue shortfall. But we also have joining us via Zoom Dr. Felix Isilfi. He's an agric economist. We'll pick his thoughts also on what he expects government to do in this particular budget, especially if he wants to tackle food inflation and the likes. Felix, Doc, thank you so much for your time and thank you for joining us. So for you as an agric economist, what are your key expectations in this budget?
Good evening to your cherished viewers, and thank you for this opportunity. My expectations are simple. First of all, I'm looking for in fact, in terms of budget allocation, kind of a good budget allocation to the agriculture sector.
Now, when you say a good budget allocation, what would be a fair allocation?
Yeah, so you know, there is this Malabo Declaration on Agricultural Development. There was some sort of conference that was held by a group of nations, and there was a declaration that every country should actually allocate a minimum of 10% to the agricultural sector. Ghana has not been able to do well in that regard, in the sense that so far for the past 3 years, the maximum we have done is to allocate 1.9 to 1.95% to the agricultural sector, which is woefully inadequate. So I am expecting that this government will do the needful by at least allocating a very significant, or making a very significant allocation to the agriculture sector.
Can you put a percentage to that?
Yeah, that is 10%. I mean, that I am expecting 10% because of the 24-hour economy. You know, agriculture can actually support the 24-hour economy very, very well. Looking at the value chain or the supply chain. I mean, from the farm gate to the table of the final consumer, there are a lot of job opportunities that government can take opportunity in order to create jobs for our teeming youth in the country. So I'm expecting that if we really want to cut down our dependency on food importation and also reduce our food inflation, adequately, then we need to actually do well by, getting 10%, kind of budget allocation to the agricultural sector. That is my take. Apart from that, if government is able to make adequate allocation to the agricultural sector, then how is it supposed to be used? I'm talking about, adequate agricultural mechanization. In this day and age, the days of a very tedious and laborious way of doing agriculture, it's past and gone. So we need to look at the modern way of practicing agriculture. In this case, trying to do more mechanized agriculture. So I'm looking at that one as well. I'm also looking at a situation whereby, government will improve our extension service delivery. For the past years, it has been highly inadequate. And so I'm also expecting that within the budget, very, clear-cut policies and allocations will be made in terms of, targeting the increase of, agriculture extension delivery in the country.
Okay, you know what, Doc, hold on a sec, yeah? Your 10% has caught my attention. So I wanted to, because that's very, very ambitious, I must say. Yeah. But if you were to, for instance, break it down, walk us through what you think the allocations should be, because you can clearly tell or get a sense from that this particular government is quite serious about agriculture, especially when it has now added agribusiness to the trade ministry. So it means that, of course, it's looking to do a lot more with agribusiness beyond just agriculture. So if you were to do your allocations, sitting as an agri-economist, what will you allocate where within that your 10% budget allocation of the total budget for agricultural sector, in your estimation?
In terms of the allocation, I've already made mention of agricultural mechanization. That is one of them. Number two, putting up very good infrastructures, strategically across the country to, reduce post-harvest losses. We also need to ensure that our market linkages are well strengthened, I'm also looking at, industrializing the agricultural sector so that agriculture will be used as a supplier of raw materials to feed our industry. And then I've also spoken about agricultural extension. In fact, if you look at the MUFA budget itself, the allocation to agriculture extension is highly inadequate. As a result, agricultural extension agents cannot reach the hinterland to visit the farmers or their farms to help them with proper modern agronomic practices in order to boost their productivity. This is because, they lack logistics and all of that. So I'm looking at ways that half of the 10% I am proposing will actually be allocated in terms of boosting agricultural extension delivery. So I've made mention of, mechanization. I've made mention of, reduction in post-harvest losses, and that deals with, storage houses across the districts, in order to ensure that as soon as the commodities leave the farm gate, if they cannot get to the cities, these storage houses are there to be able to haul them, so that at the right time they are released into the cities or into the nearby markets for supply. And then the agricultural extension aspect of it. I'm also looking at, in terms of boosting agricultural technology in terms of improved seed supply, and then other inputs like fertilizer and chemicals. So these are the areas that I am hoping that government will actually allocate the 10% I am proposing for. Yes.
Okay, so in terms of the agri-mechanization bits, which you have emphasized strongly on, out of your hope 10% of the total budget that you're hoping government to allocate to it, what percentage would you, for instance, assign to the mechanization bit?
Look at between 40 to out of the 10%. I'm looking at between 40 to 50% of the 10% that I'm actually proposing for. Because you see, without mechanization, farmers cannot expand their farm sizes because they are currently using the traditional method, that is the cutlasses and hoes. They are not able to do large kind of scale farming. They only do some small scale farming just to feed their families and then sell the remaining to take care of immediate household expenses. But if we are able to mechanize, we'll be able to transition them from peasant farming or subsistence farming into kind of a commercial agriculture, which would then produce more raw materials to feed our agribusiness industries and also reduce our demand shortages, so that we'll be able to reduce our imports of food commodities in order to make up, which in turn actually add to our food inflation.
Interesting. You know that as part of the economic dialogue, government is hoping to create a private sector-led economy of a sort. How do you think government can get more people into the agricultural sector really to create that impact that we are hoping for the agricultural sector?
NDC manifesto, it stated that they intend to implement actually agree to that, because with the farm service centers, you can have a lot of, private sector actors, playing a role. Some providing mechanization, others, providing technology to, help farmers get readily available information in terms of agronomic practices. Others will look at, input supply and the rest. And so with that, farm service centers, because at the center, you have bundle of services made available to the farmer. Some of the services include mechanization, which I have already made mention of. We talk of, extending, low interest credit also to farmers through microloans or farm insurance. You can also talk about readily agricultural input and that order. So all these activities that are actually encapsulated in farm service centers, private actors can actually participate. Aside that, part of the farm service center also look at, post-harvest, activities in terms of storage. So some private sectors can also take advantage of, building, refrigeration centers and then, warehouses to be able to actually hold our commodities before they are released in the market. At the same time, other farmers, other private sectors can also play a role in terms of supporting farmers with their marketing of their produce. Yes.
Interesting one there. So finally, how will all of this now feed into the whole food inflation conversation? And how low do you think food inflation can get in the country in the next coming months based on the policies that the proposal that you are making, and especially the trajectory you are seeing governments go over the last couple of weeks since they took over power?
Actually proposed will end up on one thing in terms of actually boosting agricultural productivity. With agricultural productivity going high, there will be adequate supply of food in the market, which will actually curtail the demand shortages, that we have been facing, for which we have to rely on importation of food commodities to actually make up the supply shortages. And so when we are able to actually harness all these things that I've just spoken about, and we are able to actually put efficiency also in place and depoliticize the whole sector, we'll be able to actually do a lot. And in terms of food inflation, look, our food inflation have actually been driven by import inflation. Our currency, has not been stable because of, the fact that food prices in the world market have gone up marginally, and the people who also do the importation of the commodities that we actually rely on imports for also have to buy dollars in order to get these commodities imported. So as a result of that, there is pressure on our currency. And so when we are able to boost productivity, we will actually cut down importation. And as a result of that, there will be less pressure on our currency, therefore leading to low currency becomes weakened, and the dollar is high. People will have to spend more to import these commodities into the country. And when they import it into the country, they have to, there is a domino effect. They have to pass on the difference to the final consumer to actually put the poor. And that is in terms of increasing prices of food commodities, therefore leading to high food inflation. So when we're able to increase productivity, we'll be able to actually reduce food inflation marginally.
Doc, thank you so much for your time. That was Dr. Esufi, Felix Esufi. He's an agric-economist. Thank you so much for your time and for those insightful points over there. On Facebook, some of your comments that have been coming through from Wafake at a Neoplan Station Circle says, Honorable Finance Minister Ato Forcing, tomorrow we want a budget with no blame games. Gilbert Bayi, good evening. Watching you live from Kintapo North Municipality. I hope Finance Minister of Ghana will touch more on the living standards and some of the taxes that affect ordinary Ghanaians negatively. Danso Bismarck is also watching us live from Nketepa. So those were updates there from our Facebook feeds. We'll turn our attention now to more expectations from this budget presentation. The Ghana Chamber of Commerce and Industry has also been commenting on their expectation, and they are urging the government to allocate funds for the proposed Women's Bank. The initiative campaign promise aims to promote to provide affordable capital for female-led businesses in the country. Now, speaking to the media at an International Women's Day event, First Vice Chair Dr. Emilia Isiakwa also stressed the need for urgent tax reforms to ease the financial burdens of businesses.
We expect that even this budget being read, we're going to have the Women Bank issue instituted. The Women Bank, we are ready for it, and so we should look at it. And then the taxes, our taxes, I think that is our challenge as well. The taxes are too high, a lot of taxes, and so even in this budget, we expect our government to also curb most of these taxes and then give these tax incentives, okay, tax waivers, so that at least businesses, we can get a lot of people, because the government is already talking about expanding it. So if we curb some of these challenges, I believe that we will have a lot of people coming on board, paying taxes for us to be able to put into good use.
So that was the Ghana Chamber of Commerce and Industry stressing the fact that they want allocations made for the Women's Bank and also taxes scrapped in, that some nuisance taxes are also scrapped. That will be for today's edition of Business Focus here on TV3. For more business stories, please check out our website. It's 3news.com/business. Later on News 360 will bring you more updates from the world of business. Please keep your dial locked here on TV3 for tomorrow. We're bringing you live coverage and extensive coverage of the budget presentation. I am Michael Obudu. Thank you.